We're joined now by Ricardo Evangelista. He's a senior analyst at ActivTrades. And Ricardo, it does seem as though the stimulus package is going to set up risk sentiment for us here in Europe. It certainly seems to have done that in Asia. How important is the U.S. economy to global markets?
Good morning, Matt. The U.S. economy is very important for global markets. The markets at the moment are sustained by the sentiment of investors that are very, very open to risk, much more than they've been, say, for example, back in March. So as the political developments in Washington unfold in a favorable way to this sentiment, the markets are likely to display and reflect that sentiment. Today, of course, we have somehow less so of an effect because many traders are away and it's a holiday in some places as well. But I think this is a very positive development for the European and global markets.
Right, it's a holiday in the UK today, but still you'd think the Brexit deal would be more important to European markets than stimulus. It doesn't seem to be. It doesn't seem to have much of an effect on, well, certainly not on continental assets, and we haven't seen much playing through in the pound. What do you make of this Brexit deal?
Well, the Brexit deal that we ended up with was to a large extent already baked into the price of the pound, and it had already been digested by most investors. The process dragged on for 4.5 years, so there was a lot of time, many ups and downs, and very tough negotiations with a lot of posturing from both sides, a certain degree of brinkmanship as well. But essentially, what we ended up with, it's considerably less than what we had before. So this is a trade deal that provides some positive developments because there are no tariffs on goods and there will be no quotas on goods. But there are many other aspects of the economic relationship between the continent and the UK that are not covered by this agreement. So I would say that it was perhaps the less bad of the options on the table, but it is nothing worth celebrating. And that's why you're seeing that there is some upside for UK assets and European assets, but this upside is very limited by the limited scope of the agreements, and it reflects only the end of the extreme uncertainty we lived with for the last 4.5 years.
When you look at, Ricardo, U.S. assets, European assets, Asian assets, what's your pick for 2021? Where should investors be putting their money regionally?
Well, I think 2021 will, maybe I'm an optimist, but I believe that 2021 will continue to carry on this positive momentum. I believe European assets are perhaps underpriced comparatively, for example, to American assets, although the composition of, for example, American stock indexes will also dictate a positive return. I would say that European assets probably at this stage will be more attractive than American assets, and elsewhere in the world, if we look, for example, at emerging economies assets as well, there will be some very good investment opportunities, assuming, of course, that this positivity remains the prevailing spirit in the markets.
Welcome back to Bloomberg Markets. This is the European Open. We are just about 37 minutes away from the start of cash trading across Europe. Remember, the UK is closed today for the Boxing Day holiday. Now, the European Union has begun vaccinating against COVID-19. That's as governments struggle with the continued rise in the number of people infected and killed by the virus. The bloc's rollout comes weeks after the U.S. and the U.K. began their own vaccination programs. Let's get back to Ricardo Evangelista from ActivTrades, still with us. Ricardo, what do you think this means for European risk assets?
It's great news, obviously. I mean, the vaccine came at a crucial point. I mean, imagine what the scenario would be like if there were no vaccines. So having success on that front has been fundamental to increase the risk appetite in Europe. The situation in several countries across the continent is still serious, of course, and things may even get worse before they get better, especially now with the Christmas holidays and families getting together and people traveling maybe more than it would be advisable. It's likely that the numbers will rise. However, in terms of the sentiment of investors, it's more likely to be driven by the expectation of the brighter days ahead that the vaccine brings than by looking at the present and the actual numbers.
So, but we see such a disparity, Ricardo, in assets across the Atlantic, with the S&P 500 up 15% year to date, the IBEX 35 down 15% year to date. Is a weakening dollar and a strengthening euro, as well as the rollout of vaccines across a region that sorely needs it, going to help those equity indexes here in Europe to recover?
Well, absolutely, it will help, but I think there are other structural reasons, as you know, for the discrepancy in performance between equities on one side of the Atlantic and the other. If you look at the composition of the main American indexes and what's behind the very successful 2020 that we've had, you see that it's been driven mainly by the tech sector, or to a very large extent by the tech sector, while in Europe there is no such thing as a tech sector, at least in terms of what we find on the other side of the Atlantic. And also Europe has been suffering quite a lot with the impact the coronavirus had on traveling, on tourism. And you mentioned the IBEX there, and in Spain we all know that it's an economy that is to a very large extent dominated by tourism, and so it suffered severely the effects of the confinements and the coronavirus. So I would say that yes, it will help, but what will really help will be the end of the pandemic.
Well, absolutely. Hopefully these vaccines work well and I can get back to Asturias as fast as possible. Ricardo, thanks so much for joining us. Ricardo Evangelista, senior analyst at ActivTrades, talking to us about markets on both sides of the Atlantic.